Most people believe they lose money in trading because the market is unfair. They think price moves without logic, without structure, without reason. They blame institutions. They blame algorithms. They blame news, volatility, and timing. And whenever a trade goes wrong, the explanation is always external. Something out there caused it. Someone did something. The market played games. But very few traders stop and ask a more uncomfortable question. What if the market isn't the problem? Because in most cases, the trader already knew what to do. They knew where the stop loss should be. They knew how much risk they planned to take. They knew the exact condition that would invalidate the trade. And yet, in the moment that matters most, they hesitate. They move the stop. They add to the position. They hold longer than planned. They start hoping instead of executing, not because they are stupid, not because they lack information, not because they don't have a strategy, but because discipline is harder than analysis. Trading accounts rarely die from one big dramatic mistake. They die quietly, in small moments, in tiny rule breaks that feel reasonable at the time. That's the real problem, not the market, not the news, not the volatility. The moment discipline disappears is the moment the account starts bleeding. Every trader starts in almost the same place. There is motivation, there is optimism, there is a quiet confidence that this time will be different. A strategy is written down, rules feel clear, risk feels controlled and acceptable. The trader knows where the stop loss is supposed to be. They know how much they are willing to lose. They know exactly what would make the trade invalid. At this stage, trading feels clean, structured, almost mechanical. Losses don't feel threatening yet. They are theoretical, just numbers on a plan. Because nothing has been tested yet, there is no emotional weight behind the decisions, no pressure, no urgency. Everything exists only in theory. But something important is already happening here. All plans are created in calm conditions, when the mind is relaxed, when emotions are quiet. There is no real money at risk in that exact moment. Trading, however, is never executed in calm conditions. The moment real money is involved, pressure appears. Breathing changes, focus narrows, small movements suddenly feel bigger. This is where the environment changes completely, and this is where most traders underestimate the challenge, because pressure doesn't test the strategy, it tests the trader. It exposes habits, it exposes impulses, it exposes discipline. This is where the gap begins, the gap between knowing what to do and actually doing it when it truly matters. And this is why the beginning feels easy. Everything is logical before emotions get involved. Everything feels controlled before pressure appears. But trading never tests your plan first. It tests your behavior under pressure. And most traders don't realize this until it's already too late. The first rule you break is never dramatic. It doesn't feel reckless. It doesn't feel emotional. It feels reasonable. Price is close to the stop loss. You think it might bounce. You don't want to be stopped out right before the move. So you wait. Nothing bad happens immediately. And this is the most dangerous moment in trading, because the market doesn't punish you right away. It stays quiet. It gives you time. And time creates the wrong lesson. Your brain starts to believe that discipline is flexible, that rules can be adjusted, that small exceptions don't matter. You tell yourself this is situational, that you're being smart, that you're using experience. But this isn't experience, it's negotiation. You're no longer executing a plan. You're negotiating with your own emotions, and the market doesn't care about negotiations. The next time this situation appears, it becomes easier. You hesitate faster. You move the stop sooner. You justify the decision more confidently. This is how discipline erodes, not in one big emotional collapse, but in small moments that feel harmless at the time. Each time you break a rule and survive, your brain remembers the survival, not the risk. And slowly, the rules stop feeling absolute. They start feeling optional. This is why accounts don't usually fail in one trade. They fail through repetition. The same mistake, executed calmly, justified logically, until one day the market doesn't give you time, and by then discipline is already gone. The dangerous part is not the decision itself, it's the feeling that follows, because when you break a rule and nothing bad happens, your brain marks that moment as a success, not because the trade worked, but because you survived. This creates confidence in the wrong behavior. The next time you hesitate, it feels familiar, comfortable, almost professional. You start believing that rules are guidelines, not boundaries. And this is how discipline quietly turns into discretion. At first, you still think you are in control, but slowly, control shifts from the plan to the emotion behind the decision, and once that happens, every trade becomes negotiable. The second loss feels very different from the first one. The first loss was uncomfortable. The second loss feels personal. Now it's no longer just about the trade. It's about you. You start replaying the decision in your head, what you should have done, what you could have changed. You don't want to accept that the plan failed, because if the plan failed, then the loss is real. So instead of accepting it, you try to fix it. You hold the position longer than planned. You move the stop loss slightly. You tell yourself it's temporary. At this point, something important has changed. The trade is no longer based on probability. It's based on emotion. You are no longer managing risk. You are managing discomfort. And discomfort is a terrible decision maker, because discomfort wants relief, not accuracy, not consistency. Relief feels urgent. It feels necessary. So every decision now has a story behind it. You're not breaking rules. You're adapting. You're not increasing risk. You're recovering. But this is how emotional escalation begins. Each small adjustment makes the next one easier. Each justification sounds more convincing than the last, and slowly the original plan disappears. What remains is reaction. Reaction to price, reaction to fear, reaction to the need to feel better. By the time you realize what's happening, the trade is no longer in your control, and the damage is already done. The dangerous part is how normal this starts to feel. Nothing looks chaotic. Nothing feels extreme. You still believe you're in control, but control has quietly shifted. You're no longer following a plan. You're responding to feelings. Every new candle feels important. Every small move feels meaningful. You begin watching the screen more closely, as if attention alone can fix the situation. This is how emotional escalation hides itself, not as panic, but as focus, not as fear, but as involvement. And the more involved you feel, the harder it becomes to step away, because stepping away would mean admitting that the loss is real, and that is exactly what emotions try to avoid. Discipline feels boring for a very specific reason, because discipline removes drama. There is no excitement, no adrenaline, no emotional reward. You enter a trade, you follow the plan, you exit when the rules tell you to exit. Nothing special happens, and for most people that feels wrong, because we are conditioned to associate progress with intensity, with movement, with action. But discipline is quiet. It doesn't announce itself. It doesn't feel smart. It doesn't feel impressive. It feels repetitive, doing the same thing, the same way, over and over again. Most traders hate this, because boredom creates doubt. If nothing exciting is happening, it feels like nothing is working. But professionals understand something most beginners don't. Boredom is not a sign of failure. It is a sign of control. When trading feels boring, risk is usually managed correctly. Losses are small. Decisions are predefined. Emotions are limited. There is no need to react, no need to prove anything. This is why discipline works, not because it feels good, but because it removes unnecessary decisions, and fewer decisions mean fewer mistakes. Consistency is built in silence, not in excitement, not in big moments, but in quiet repetition. This is the part of trading nobody posts online. No screenshots, no highlights, no stories, just execution. And this is why discipline feels boring, because boredom is the price of staying in the game. This is uncomfortable for most people, because boredom feels like stagnation. It feels like nothing is happening. But in reality, boredom is stability. It means the system is working. It means emotions are not in control. It means decisions are already made. You are no longer reacting. You are simply executing. And execution doesn't create excitement. It creates results over time. This is why discipline feels unnatural at first, because it goes against instinct, against impulse, against the desire to intervene. But trading rewards those who can stay calm when nothing happens. And that calm is what most people can't tolerate. Professional traders don't think about winning the next trade. They think about survival. They understand something that most beginners miss. You don't get paid for being right. You get paid for staying in the game. This changes how everything is measured. A good trade is not defined by profit. It is defined by execution. Did you follow the plan? Did you respect the risk? Did you exit when you were supposed to? If the answer is yes, the trade is successful, even if it ended in a loss. This mindset removes pressure. There is no need to prove intelligence, no need to predict the market, no need to force outcomes. Losses are expected. They are planned for. They are part of the process. Professionals don't try to avoid losses. They try to control them. Because a small loss is information, a large loss is damage, and damage limits opportunity. This is why professionals are patient. They wait for their conditions. They accept missed trades. They let opportunities go, because they know another setup will come. Urgency disappears when survival becomes the priority. And when urgency disappears, discipline becomes easier to maintain. This is the difference. Not intelligence, not speed, not prediction, but respect for risk and commitment to process. This is why professionals feel calm when others feel stressed. They are not focused on the outcome of a single trade. They are focused on the sequence. One trade means nothing. 10 trades mean very little. Only consistency over time matters. This perspective removes emotional weight. There is no rush, no pressure to act, no fear of missing out. Because professionals know that patience is part of the edge. They don't need action to feel productive. They need alignment with their rules. And when rules are respected, results take care of themselves over enough repetitions. Tick 0 is the moment before the trade, not after the entry, not after the result. Before fear appears, before hope takes over, before ego gets involved. It's the moment where nothing has happened yet. And because nothing has happened yet, everything is still under your control. At tick 0, the plan is clear. The risk is defined. The rules still matter. But once the trade is live, the environment changes. Emotions enter. Pressure builds. Urgency appears. Tick 0 is the last moment where discipline is effortless. After that, discipline must be chosen. This is why professional traders slow down right before they act. They pause, they breathe, they confirm the rules, not because they are unsure, but because they respect the moment. Tick 0 separates execution from reaction. Reaction happens after the trade. Execution happens before it, and the quality of that moment determines everything that follows. Tick 0 is not about getting rich fast. It's about staying disciplined long enough to become consistent, and consistency is what keeps you in the game. This moment is quiet, almost invisible, but it is the most important moment in trading, because once you act, you can no longer control how you feel. You can only control what you decided before emotions arrived. That is tick 0.